China, regarded as the world's factory, is running out of steam. The country's manufacturing activity has now contracted for 7 straight months. It's a long time, and the longest slump in nearly 9 years. The data shows factory output dropped sharply in October, with the official PMI falling to 49, signaling the biggest dip in 6 months. Just days before the Trump-Xi trade truce was announced. But that breakthrough has done little to actually lift confidence, it seems. New orders fell the most since 2023, by the way, hit by trade barriers and the sluggish demand at home. Analysts call it a discouraging start to the final quarter, a discouraging start, a sign that policy support is still needed in a way. China's Statistics Bureau has blamed the decline on fewer working days and a complex global environment. But economists point to a familiar headwind here, tensions with the United States, to put it simply. Last month, President Trump, remember, threatened 100% tariffs on Chinese imports, escalating his trade crusade. The output index dropped below 50 for the first time since April, when Trump's so-called Liberation Day tariffs were first imposed. China's export orders also hit a new low. For manufacturers, meanwhile, the latest Trump-Xi trade breakthrough that reduced some tariffs may offer temporary relief. But weak domestic demand, as well as uncertainty in relations between the two sides, will continue to cloud the outlook. Now, China's services sector did see a slight uptick thanks to the 8-day national holiday. But exporters are saying they are no longer relying solely on the US market, and that they have learned their lesson from years of trade turmoil, a feeling familiar to even allies of the US who have been on the receiving end of Trump's unfair trade war. Now, coming back to China, exports still account for about 1/3 of China's growth this year, helping it stay on track for around 5% annual expansion. But analysts are warning the final quarter could be China's slowest since the COVID-19 pandemic. The Chinese government has already rolled out a 1 trillion yuan stimulus package, including new funding for infrastructure and policy banks, and some expect more rate cuts and liquidity easing soon. Looking ahead, Beijing is double downing on tech as well as manufacturing, promising extraordinary measures to drive innovation and strengthen export controls in its next 5-year plan. The question still is, can China reinvent itself fast enough to stay the world's factory, or has that era already started to fade? We will have to wait and watch for that answer.